Hi, everybody. Still here. The daily market pulse for this Monday, November 18, 2013. So we saw stocks fading. So they were up for a little bit at one point or another. The biggest fade of the day really was the Nasdaq. I will show you the charts, of course, here in a moment. But everything was down. But really, this is a lower volume day. Even though it was a down day, it's a lower volume day. So it's not constituted as a heavy institutional selling day. And generally speaking, that's more of a profit-taking day than what's lower volume. So there's a whole lot less to be concerned about and be worried about, obviously, in this sort of situation. So you're looking really for at some point where support will be met, and then you're looking for some kind of an entry location here on this little dip. So more of a dip than anything else. Certainly not a major pullback or correction. We still have 6 distribution days on the Nasdaq, 5 on the S&P. Those are, obviously lofty, kind of elevated. We were under pressure up until we broke out to higher levels last week. So that kind of erased that part, making the uptrend a little bit more confirmed once again. So we have to keep an eye on everything. And of course, everything right now in terms of the U.S., including the TSX, is remaining currently in trading above their respective 8 moving averages, or their 8 exponential moving averages as well. So far, overall trend is up, but certainly a little bit of a caution for a pullback, at least a little pullback to at least a profit taking right now. All right, so looking at the major indexes now, you got the Dow Jones on the screen here, and you see the channel that we're still in, still riding upward, up, down, of course. And what we've been talking about is if there was kind of a breakout above that little blue trend right here, that we'd be looking at 16,000 for 2 reasons. 1, big round number. 2, top of the channel as well. So now, of course, it hit that high today. Let's see here. Can we get it? Come on. Okay, so what's selected? Something is selected. There we go. The high is 16,030, so it surpassed 16,000 by several points, and then retreated, closing below 16,000. So it may want to test up here at least a little bit. There's no sell signal here, but certainly you're at the top. You're into the Bollinger Band. You're at a 16,000 mark. So it'll be interesting to see what they do and react up here at these levels, kind of on the lofty side. That's why there's a possibility of a little bit of a dip, a little bit of a pullback at some point before potential resumption. It may come all the way back down to the 8 moving average. It may also come back down to the little trend line. But certainly, none of that may even happen as well. So, we may be all wrong on all counts, but we're going to be looking to see if it maybe comes down to 15.9. Hard to say, but anyway, we'll see what it does. But certainly, it'll be interesting to see how it reacts, of course, at these levels. Let's look at the S&P very quickly. Very similar, but yet the trend was not up. You see the horizontal red line. It was actually resistance across here with the bearish engulfing, just below 17, around 1775. It broke out, as we know, last week. And then we have, a dark cloud cover today, but it's really not a huge, significant, very bearish candle at all. Dark cloud cover, of course, being that it opened above the previous day's close, closing down at least midway point of yesterday, or at least Friday's candle in this case. So it's not huge and significant, but still, it is overbought in this area. It's into the Bollinger Band. And we had talked about the level being hit here was 1800, another round level, another round number. High today of 1802.33. So you can see why they were going to see these psychological levels, and they're pulling back at least a little bit. So once again, back to the red line, back to the 8 moving average, 1775, 1780-ish, may be the place where it pulls back to. Look for an entry in those levels, perhaps, at that point. Looking at the Nasdaq, as mentioned earlier, as we started this recording, larger sell-off for sure. So this one, see, remember the Dow Jones was rising. Let me move that right there. Here we go. The Dow Jones was rising with this trend. The S&P was flat, and then of course now we see the Nasdaq is actually in declining mode. In this case, it broke out, as we know, into the Bollinger Band. Bollinger Band not really opening very aggressively. You see the last couple of green candles, the last couple of real bodies from Thursday and Friday of last week were very small. So after a nice breakout, kind of a grind, and a little bit of a fatigue factor, showing signs of a little bit of fatigue and being tired. That's why you see the small real bodies, and then you saw more of the selling today, but again on lower volume, so nothing horrendous to be overly concerned about right now, but it hits essentially a round number. We talked about this as well, into 4,000. 4,000 pulls you back into this area now, 39.50. We'll see what it can do in this area here next. TSX, let's take a look at that. So similar, you see the Bollinger Band's very, very tight. Another little bit of a breakout of sorts above 13.4, well, into 13.4, I should say. Into the evening star formation high, you see that gold line across. I'll point it out for you. This gold line right here. So it runs into that temporarily on Thursday. Friday breaks up. We see the Bollinger Bands are not doing anything. So it comes into this 13.5 area. Reasonable round number. Bollinger Bands are still not opening. So there's a level of volatility that still could be expected shortly. Question is which direction. You'd anticipate based on the pattern that you'd be going to the upside. So we'll see if that's exactly what they can muster up and do. So the 8's still rising. The 24 is still rising. The 50 is still rising as well. So everything still seems to be pointing to the upside. So right now, as I said before, looking for a little bit of a pullback, a little bit of a just a little bit of a dip, looking for a support area, looking for a bounce and an entry point. So that covers that part. Let's take a look probably at the U.S. Canadian dollar very quickly. Look at a view, select items, and there's the pullback. Let me back out of here a little bit so you can see the support area across here based on an old pivot. Right there. That's where it is to right now, including the 20-day moving average. I might expect a little bit of a bounce here. If not, you're heading much, much lower. If it breaks below 104, then you're looking much lower into the next pivot down below where the bullish engulfing was at 123.80, 120.85 maybe. But right now, looking for a bounce primarily likely in this area to back toward 105 and back toward 105.50 to 106, which was the original at least thesis that we had originally. Treasuries were up most of the day today. You can see grinding up off the 131 level. Talked about how high could it go? Probably 133.5 to 134, just because that's the 50% retracement since this last decline. Thereafter, hard to say. It's also outside of the old trend line and channel line that it was in before. That would also coincide with 134. Then we'll see. 8 moving average is rising, but below a rising 50. So we'll see if they can get this and muster this up a little bit higher. See if they can get it back toward 135 to 136. From here, gold becomes probably important. Typically, and always, at least in the past anyway, was considered the safe haven. So when things got ugly, people ran to gold. So you can see it's very much testing the old doji levels. You had 4 consecutive doji spinning tops back here mid-October. That gold line illustrates that now. It's come into that area multiple times. It's bounced, formed a very mild to moderate morning star formation. Sideways back to retest once again the morning star again. 1270, and we're seeing what we're going to do. There's a little bit of a divergence in the stochastics where the lows of the stochastics are a little bit higher than what price action is demonstrating. So maybe momentum is building here. You'd still like to see this come up through 1290 into 1300 and higher. Otherwise, you start breaking down below 1265 to 1260, then you're heading further south on gold. Oil, we'll look at that very quickly as well. Some of the key elements, key sectors and industries here. Crude, this is a continuous contract we're going to look at here. As it's loading, it's still in a decline for the most part, but you can see for the most part sideways, primarily sideways. This last little candle you see is actually starting off tomorrow's trading session, but you can see what's happening here. And we've pretty much rolled over from the December contract into the January contracts, but this is kind of a conglomerate continuous contract. So sideways retesting this whole blue shaded area, which coincides with a pivot dating all the way back here from June of this year, 2013. So that's where it's testing right now. Nothing conclusive in either direction, although it's really not pushing off the support area very aggressively to try to go higher. It's got to get and clear 95.50 to get into 96 plus. Ideally, the goal would be 99 to 99 essentially area. After that, would be 101. On the downside, of course, if it starts to break down below 92 and particularly 91.50, 91.75, then of course it gets a little uglier. So that's oil in a nutshell. Let's take a look at just the small caps, because that is typically always considered risk on versus risk off. So when you say risk on, meaning that when the markets are aggressive, they are usually buying small caps abundantly. technology aggressive stocks as well. So you can see there is a bearish engulfing that occurred back here following multiple spinning top dojis, and you're right back into that exact resistance once again, forming a bearish engulfing today. So a little bit of a grind going into here with a little bit of a fade. Now back to the breakout 20 moving average, 8 moving average as well, which you'd expect should be a reasonable support here. If it can bounce, you're still looking for a breakdown of 1150 to almost 112, ideally. Bollinger Bands are still very tight, looking for some kind of an opening to allow room to grow and go higher, but that's not been the case as of yet. So this is going to be a key level to still break out from. We can look at transports very quickly as well. Bearish engulfing as well, not near the size that we saw earlier. We see the Bollinger Bands are trying to open, but nothing really fulfilled or accomplished yet. Nice series of 6 consecutive green candles to the upside, so you would expect at some point a little bit of a break, a little bit of a pause would be expected. So look for maybe a move back toward the 8 moving average, that blue line you see there right currently at 127.09. That'll be a little bit higher tomorrow, so maybe closer to 128 perhaps. Let's see. Retail becomes important as well in this whole industry and pardon me, more of this economy. See again, look at that little bit of a rollover the last couple of days, Friday and then now today, Monday, a little pullback into the 8 moving average and the old breakout area. Makes total sense to test where the breakout occurred, and so this will be a consistent pattern that might be expected on stocks, leadership stocks, including some of the indexes and sectors and industries. Semiconductors very quickly, then we'll finish off with the VIX. So there's SMH, ETF proxy. So you can see the series of highs in blue and red areas essentially to surpass. It got into that first red line, the high of the bearish engulfing. It formed its own bearish engulfing, but settled right at the 8 moving average for now, which also coincides currently with a 20 simple moving average as well, right around 40.75. So it's kind of trapped a little bit here between moving averages and that little resistance area from that former bearish engulfing on the 7th of November. It's got to muster up some energy to get through 41.50 on the upside to go bullish and long still. Otherwise, it's coming back toward the lows near 40.25. And let's look at the VIX very quickly. The VIX typically, the index representing fear. So we've said this many times in the past. When it gets down here at 12.50, 12, it starts to get a little jittery, it gets a little anxious. It starts to get a little hoppy. So it's a little bit of a decline, a little bit of a very quiet candle on Friday, and then essentially now forming a morning star. That's a fairly moderate and strong morning star, which tells me, as I said, they expect a pullback in the markets here, where the VIX would likely pop back toward about 14, possibly higher. It could pop into 14.50, maybe as high as 15, but about 14 to 14.50. Would be the expectation. Thereafter, don't know, but that's a window that it's going to be meeting. That's where the 200 is. That's where the 50-day moving average is as well. Upper Bollinger Band will coincide very closely. So you'd expect some kind of resistance in that level, that area. So that's what I'd be looking for. A little bit of a pop here in the VIX tomorrow, or at least some kind of continuation over the next couple of days, perhaps into that area. We'll see what the markets are likely then to fade coincidentally with this as well. All right. Okay, so let's go back real quick to the Dow. And that should pretty much conclude. Yeah, that's where we stand. So keep an eye on things. Expect a little bit of a pullback. Maybe add some shorts to your current portfolio just as a hedge. Maybe peel off some profits that you've already made on some of the stocks. And you should be okay. So we'll be back tomorrow with another update. Look forward to giving you that tomorrow on Tuesday. Have a good night.